Good morning, everybody. Welcome to the Flow Show, CPI Day, Wednesday, the 15th of January. Let's see if we get a similar reaction to what we saw after the PPI data yesterday. Who knows? We'll wait and find out. Morning, Mr. K.
Morning, Ryan. Morning, everybody. How are we doing today?
Yeah, all good, all good. Finally saw my team get a win last night. Scrappy though it was. Yeah.
So, throw it away.
Yeah. Can't do it the easy
way. Away once more.
Yeah. Gave it a good go chucking it away. But anyway, sometimes the scrappy wins are the best. Right, let's go on. PBOC still fixing in the 718s. And I haven't checked, but this is maybe becoming the longest period where they've kept fixing at one level. We did have a couple of periods last year, I think, where they kept fixing at the same level, but this is really dragging on now, this 718. They really want to keep the noose around the neck of the yuan, stop it weakening further. Looks like some of the top financial regulators in China have not been producing the goods because they're having their pay cut in half. According to sources out of China. So they want to cut pay in half for staff at top financial regulators. Must do better. We'll be going down on the old report cards. Over at the Bank of Japan, Mr. Ueda was out. And it looks like, again, market still hanging out for the hawkish notes. He says we'll raise rates if there's an improvement in the economy and rising prices continues. Then he said he will make the decision whether to raise rates next week. As I say, the market taking that on the dovish side or inferring the dovish side. It's absolute that they will make a decision on whether to raise rates next week. But thus far, that decision has been no. As I say, the market still wants to hope that there's going to be a hike. Is there going to be a hike, Kay?
Well, it leaves the door open.
Just the door?
Here we go again. Yeah, my microphone is always switching, and I don't know why. Tried to mend it yesterday, but it does seem to play up again. Yeah, so he does leave the door open. This is what the market is trading. Perhaps also a bit of hopium that there won't be too much of a fight against Japan once Trump takes the seat. I wouldn't be surprised if the market trades it that way. So it is a fact that we're in a range. We're in a range into whatever has to happen. But the market, tries to sell the rallies, and I think we are going to stay in this range pattern, unless we see big expectations for either side of what Trump wants to do. But I do think that Japan is going to be left alone. So the market is probably leaning towards selling rallies on the dollar yen from here into next week.
Yeah, now I've just looked at the monetary policy meeting comes out on, or the announcement will come out on the 24th, Friday next week. That will be after Trump's gone in the hot seat. Mm-hmm. Do you think if he comes out and slaps some tariffs on Japan, that will push them to a hike?
If he slaps tariffs on Japan, I think they are going to be worried about growth and they won't hike.
Yeah, so the opposite.
It's for Japan, the situation is a bit different than for other countries, I reckon. They are still, well, I mean, in the big lines, they are still trying to fight deflation and not really inflation, right? So I don't think that if he slaps tariffs on Japan, there should not be a hike, in my opinion. Because that it would be kind of counterproductive if it weighs on the economy. I think they're going to get a lot of criticism if they hike and Trump slaps tariffs.
Yeah, because it is
the chances of Trump slapping tariffs on Japan, at least at the beginning, is extremely slim, no?
Yeah, because the difference with Japan to a lot of countries is that Japan does have a lot of their business in the US. You know, all the
Yeah,
big Japanese
for one,
firms, you know,
and for
produce in the US. It's not like Mexico that produce in Mexico and ship into the US.
mhm. Yeah,
Um, it's
absolutely.
it's
There's
very different.
yeah, there's one, and then the other one is they need Japan to as an ally, as really a military ally as well. US is still in Japan. They need them to keep an eye on China, North Korea, whatever happens in the Pacific.
Yeah, exactly. So anyway, yeah. So we shall see what happens next week. But they're going to be the first central bank after Trump comes in. So some comments might be interesting what they have to say about that anyway. But we won't know what's happened with Mr. Trump until then. So we'll have to wait. Right, coming over to a bit of data. CPI data coming out in the UK and elsewhere. Softer numbers, core CPI down to 3.2% from 3.5%, lower than expected. Headline CPI was expected unchanged, came in at 2.5% as well. On the retail prices as well, that's coming in lower. Core RPI down a pip. We also had the main RPI coming in down at 2 pips, was expected to go up 2. PPI, you could make a case that it was lower-ish. Input prices had another negative year on year, though output prices rose a measly 0.1%. So input prices down, output prices up. That still ticks the inflation column rather than falling inflation column, because it still means that prices from firms are still being raised, albeit very small. But anyway, the CPI numbers were the main look. That's opened the door a little wider for the Bank of England to cut rates in February, early February. Market now pricing some 50 basis points, nearly 50 basis points in cuts for for this year. That's up from around 34 basis points in cuts. Now, we've been talking about this. We had Breeden speaking last Friday, who was one of the ones who voted to hold, said she's seeing evidence that further restrictiveness can be reduced. So that might be nudging her, or was already nudging her, maybe over the hold line into the cut column. This CPI data might cement that. So it's going to be a very close call for a cut in February. February 6th, I think the BOE meeting is. So they could cut, or I think maybe at very least the vote will be a 5-4 to stay unchanged, just based on Breeden. And we might hear from a couple of others before then. Kay, if the BOE cut, is it going to be a cycle? Are they going to do some follow-up cuts, or is it just going to be another one and wait?
Well, there's a bit uncertainty and at least disappointment as well going through UK Inc. Right now as well. We've seen those retailers, we've seen others saying that the UK, it's tough to really invest and everything. It would be well wise perhaps to start a cutting cycle. But yeah, there's so much uncertainty coming into the budget soon, and it's going to be a scramble for cash. So I'm not sure where the BOE really stands in all of that. What is for sure is that the numbers that we have seen today have rather than helping to decide what the BOE is going to do, have taken away a bit of pressure on the gilt market. So that in a way is helping them a bit, because if the situation calms down, then they can look with a bit of a cooler head to potentially cut just once and then see what happens. They're going to be ultra data dependent, I think. Data and investor dependent on the back of Reeves.
Yeah, absolutely. And I made the point in the chat room just earlier. We've got GDP tomorrow from the UK. It's the monthly number, not the quarterly number, which doesn't usually get more than a cursory glance. But in this environment, if it's a negative one for the Chancellor, for the UK, it's going to be negative for the Chancellor because investors aren't going to like that one little bit. So she's under pressure, and she needs a bit of breathing space. As Kay said, she might have had some from the CPI. Maybe she'll get a bit more tomorrow.
Absolutely, Ryan. I think we spoke about that, and I mentioned that as well. For the better part of 2024, sterling was really in the hot seat and doing pretty well. I think, and then I warned against the possibility to look at the risks now for sterling starting of this year, and this is how it looks. I think even though cable bounced somewhat on the back of bit of relief in the data and in the gilt market, but the market is still looking rather at the risks for sterling to start the year than the potential opportunities. I'm not reading a lot of positive news from the or opinions by the investors. Some calling the UK uninvestable right now, which is bullshit. But it just shows us what they are thinking and how they look towards the UK. It's a bit of a shift in sentiment.
Yeah, it just shows how quickly sentiment can shift for the UK. How long last year we were talking about pound exceptionalism, UK exceptionalism, and now it's all been shot to shit, and you think we were just about to disappear up our own butts. But that sentiment for you can turn on a dime. Sweden, they had some CPI data out. Again, just seeing a bit of inflation edging lower. Their CPI FX energy coming in at 2% versus 2.1% year on year. A big drop on the main CPI number, 0.8 versus 1.6 prior, though it was as expected. So is that the Riksbank ready to hit the button again?
Well, Benji was pretty dovish afterwards. They are somewhere at or around their target. It's possible. The Riksbank has always been give or take one or two spots among the more dovish ones, thinking that it could come lower. And let's not forget, the Eurozone is their biggest trading partner, so they are not looking at the Eurozone as with very good eyes right now. So they have to look at risks more than the tightness somewhere. So there's no reason to be tight in Sweden right now.
Yeah, absolutely. Right, ECB's Lane. He's the chief economist over there. He was speaking in Hong Kong, saying the effect of monetary easing will take a while to kick in. The Eurozone is essentially still in an economic recovery mode, and they need another phase of disinflation to happen in 2025, which they may well get if activity remains weak. ECB's Villeroy still doing the victory laps, saying they have practically won the battle against inflation. Says it makes sense for the ECB to reach 2% by the summer. It says lower ECB rates will boost the financing of the economy. And finally managed to speak about his own country's growth forecast for 2025, saying that the risks to their 0.9% growth forecast are on the downside, but we do not see a recession. There'll be a recession coming by March, probably, the way these guys talk. Coming over to yesterday's data from the US and those PPI numbers. Now, this is going to be important for today's CPI data as well. Okay, we were expecting higher numbers in PPI. They missed expectations, okay, but they still showed sticky or higher inflationary pressures. PPI may have missed the 3.5 expected, but it still went up 3 pips. Core PPI came in unchanged, although it was revised higher. So what we got was the market initially sold the dollar on that miss. but then the realization came around that it was still inflationary. The same thing could happen today as well with the CPI data. We are expecting quite an uplift in inflation, 2.9 from 2.7%, so 2 pips up. The core is expected to come in unchanged at 3.3%. So if that comes in, CPI comes in at 2.8%, then the market might ease on dollar and yields a bit because it wasn't as high as expected, but it will still be yet another rise in inflation. Keep an eye on this core measure too, okay? As I've been pointing out, it's been above 3% for coming up to 4 years now, okay? That is not getting to target, even if the headline might start heading there. This has been really, really sticky. And that's going to keep the Fed on pause mode for now. So unless we get a real soft number, and that's the core, you know, going under 3%, maybe CPI comes in at 2.5, 2.4. Unless we see something like that, then we're going to stay in this vein of form for yields remaining up here and the dollar not straying too far. Main King has asked, do you think the dollar will reverse its move anytime soon? If so, what currencies have great reversal potential? All currencies have great reversal potential, Main King, given how they've moved so far. Cables moved down short period of time from 134, euro dollar from 112, dollar yen has obviously shot up bigly as well. So all of them, Aussie dollar, no matter what you look at, there's all potential. Okay, they're all going to go slightly different speeds, but they're all going to go the same direction. What will reverse the move? Obviously, things like inflation coming down very quickly. Other data points weakening substantially. So if you're getting the itch because you want to start shorting some dollars, you need to be careful. You need to pick your levels. You need to know that right this minute you're fighting a very strong trend. So if you're going to fight a trend that's this strong, then you need to think about your risk when trading. Maybe you don't go as big a size. You keep your stops tight. You don't need to be offside by hundreds of pips to know that you're wrong. Okay, look for evidence as to why you might see a market turn around. Dollar yen, we've been speaking about the range. 158, 40, 50, 157. Well, now we're looking a little bit softer under 157, but it's not falling out of bed. Okay, so if you were shorting around here, then you've got some good pips. You need to think about what happens if it doesn't go further. But there's nothing in this trend. That's September. So from September, we're still in a very strong trend. Decent pullback, off we go again. This is just this next second leg of this move here. So, you know, you want to short the dollar, you need to be very careful and manage that with your risk. Kay, what are your thoughts with the CPI today? What's it going to do for the dollar?
Yeah, yesterday I was a bit off. I thought PPI would come in higher, but then looks like CPI may be a bit more delay in the numbers, right? So they may be looking a little bit. I still think it's going to come in hot, but it all depends where we are compared to expectations. If we come out, because the market now really knows that inflation is sticky, right? I think we need to come in. Well, first of all, probably the surprise trade will be a weaker one with the dollar coming off a bit more rapidly than if it would be a sticky one. The thing is, Ryan, we are less than a week before Trump's inauguration. I would say that if it comes in around expectations, which the expectations are a bit sticky, it's going to be an algo blip, and then we are going to turn our attention to the inauguration, and this CPI number could be really quickly in the rearview mirror, because what's to happen will have a much bigger impact than just a CPI read, which is sticky, but we all know it. That's roughly how I look at it. again, if it's a weak one, perhaps a bit a miss to the downside, then perhaps a bit more of an impact on the dollar, especially that we are now leaning towards Trump perhaps not signing huge tariffs from day one. So the market may be continuing to lean into that for a while. So perhaps a bit less buoyant on the dollar. That is about the risk for today, I would say. If you look at something specific.
Yeah, yeah. As I said, pretty much exactly that. After yesterday's CPI, the algos looked at the miss, the macro looked at the higher numbers, and that's where you got your difference in trading. So here's a question. Okay, get CPI out of the way and whatever it is. Can you see the potential for maybe a bit of profit taking going into Trump? So obviously yields have been sold heavily. Could we see just a bit of risk coming off the table?
I think it is. I think it is possible, and I think you know what in FX it's already happening. We've seen the bounce in all the currencies versus the dollar. So in FX, I have the impression that at least the shorter to perhaps short medium term market is probably going to go into Trump's inauguration, rather having options on the board than real having a lot of cash. Well, I'm not a big investor. We are like very small fish, but I know that I'm going to be very low risk in dollars going into Trump because everything is really possible. I mean, if you listen to what Rubio was saying yesterday, they are going to slap tariffs on the entire world from day one. But then if you think about what may be the considerations of immediate harm and don't forget that Trump is one, a deal maker, two, extremely narcissistic, probably will be wanting to be remembered as one of the best presidents in history. I'm not sure that he's going to do it straight away. So and my base case is rather the opposite, that he will go a bit slower. So if the market takes that into consideration going into Trump, we may see yields coming down a little bit, the dollar being on the softer side as well.
Yeah, yeah. I'm a little bit the other way. I think he will talk hard in the first opening scenes, shall we say, but then what he actually does and what the numbers actually come out like will be lower. But
Well,
that's
that's about
next
what I
to
think.
the market.
We think about the same. I mean, he's going to come in and he's probably going to have all the executive orders on his desk. He's
Yeah,
probably going to hold them up, show them all to the world, and goes like, "Here, they're ready to sign, but I'm not going to sign them straight away."
exactly. Yeah, you've got a deadline of XYZ. Come to
Yeah,
the table.
yeah.
Yeah, but yeah, I agree with what's going on. I mean, just looking at euro dollar, we've got that famous pattern that I like to look at. When you come down, you make a low, you make a new low, then you step back up to that low. That's the sign of a market that maybe has gone as far as it wants to go for now. Doesn't mean we can't keep going lower, but it's going to need something extra now to give it a shift. And we're seeing that in a lot of pairs at the moment. These bounces are still pretty weak in the wider trends. Looking at cable, as I said, coming down from the 134s, 1,300 odd pips we've come down, and the bounce just about 100 pips, 130 pips. It's a weak bounce, but bottoms start somewhere, and they usually start with a bit of price action that shows you that it's finished going down. We've had the low, we've had a step up, we've had another step up today. So can't get through 122, 40, 50. So it still looks very weak, miles away from that 38.2 fib just to this leg, even further away from the leg from 134s. So still very weak on the wider picture, but we might just have a bit of pause for Trump, and we could see a huge rebound like Main King might be looking for, or we could be heading even lower.
Yep.
Just now we're seeing a bit of pause. Yes, mate.
Yeah, to come back on what Main King is asking, do you think the dollar will reverse its move anytime soon? I guess Main King is asking about maybe the medium to the longer term. The thing is, Main King, we really next week. I mean, Trump has the potential to to direct the dollar really. We know that he doesn't like a strong dollar because he thinks a weak dollar is good for exports, but he may not have the choice if he slaps tariffs on everybody. Or if it's a consideration, he's probably going to go slow on the tariffs, and then you may see your dollar being impacted. But it's far too early to call a reversal, as Ryan just pointing out.
Yeah, I suppose we need to see what he thinks about inflation as well. Whether he sees that
He
as a
doesn't know what
possible.
that means.
He knows about it when his green fees go up. I'll tell you that. Right. Speaking of Mr. Trump, he has issued one of his statements to bring out another plan he's cooking up. He's going to create the External Revenue Service. We've got the Internal Revenue Service, the IRS. Now he's got the ERS that's going to collect our tariffs, duties, and all revenue that come from foreign sources. I'm not sure how that one's going to work, but if he's going to be doing the planned 2 to 5% a month tariff hikes, then he's going to need another department to account for all that. I wonder how Mr. Musk thinks about that, creating another government department where he's going to try and slash that sort of thing. We'll have to see. Something that is starting to be felt, and we're talking about the tariff effect, is in the Canadian oil markets, because one of the guys there had a chat with some of Trump's team, and the proposed tariffs will not exclude oil, which is going to be a big problem for Canada and potentially the US, because a lot of Canadian oil is used by US refiners on one of the coasts. And if there are 25% tariffs, that could increase US gas prices by up to 30 cents or more per gallon, according to a firm over there. Now, we always have the correlation between oil and the Canadian dollar, but there's a few reasons why we haven't seen that correlation working a lot at the moment. Most recently, and based on these stories, what's happened is that the discount between Canadian oil and WTI has grown. It was $15.75 below WTI yesterday. That was even further down from 14.70, so down over $1 discount now between Canadian oil and WTI. So even though WTI has been going up, that discount from the Canadian stuff has been going down. So that's why, again, this correlation between oil and CAD is probably not going to work for a while longer. And that tariff threat is, again, one of those real life examples of what can happen when tariffs go in on economies and how it affects economies. So that one is going to need to be kept watching to see what happens there. Anyway, that's that. Anything else, Kate?
No, I think we covered most of it. Yeah, we posted a bunch of stuff for those people who are in our chat room. We posted again like a bunch of stuff this morning, Gav as well, about what's going on in the UK and everything. The retailers, what's going on with Japanese tourists and things. So for those in chat room, have a look at our news and research room because we post a lot of stuff down there. In there as well, and that's one of those good reasons why you should be in our community, is just because we are not only talking about what we're talking about here on the show, but we show our trades, we talk about a lot of stuff, we talk about indices and everything in our specified rooms as well. Okie dokie. Yeah, for the rest, nothing really special, Brian.
Yeah, and this is a great resource, the news and research room, because you can come in the morning and see what's gone on overnight. If there's any important headlines you need to catch up on, you can read what you either said. You can get right into it early doors. And then likewise, all our US customers who come in, people like Brand, they can come in, have a little read through, get caught up with all the news and headlines. Obviously, we talk about all that sort of stuff in the general chat room as well. We've had a big old discussion about the the UK CPI data this morning, what it means for yields. Does it mean the pound's going to be moving much higher, etc., etc.? So always lots of information. It's not just about throwing up charts and talking about trades. It's getting into the nitty gritty of all the fundamentals and the data and whatnot. So if you're not in there, come and take a look. Have a look.
It's a crime if you're not in our community.
Absolutely,
because we are going to slap tariffs on you if you're not in our community.
Yeah, and we've got Gav's got a marker over his head at the moment because he keeps missing the second half of the flow show. So we'll have to see. This will be the third day of the trot if he misses that, and then woof, he's in for some trouble if we find out that's the case. But anyway, right, let's get into what's going on. Spoke about cable. Said not a lot to talk about at the moment. Still in this bearish phase. 122, 40, 50 is your number. Close by at 123s after that. If we're coming back below 121, 40, 50 down to this low 35s, then we're probably going to give 121 a test as well. Euro dollar, similar boat. Told you about this 1, 2, 3 step up. This 102, 77, 80-ish area where we had a bit of a break first time around, but then we've had a little bit of traffic around it. Support, resistance. That's your nearby support level first and foremost, and then down to 102.40s. Keep an eye on that. But again, struggling just to get above these early Jan highs, 103, 20s, 30s. All small steps still. So unless we're busting up through there, it's going to keep the pressure on for the moment. Not a lot else going on, mate. I don't even know where to look.
I'll grab a couple if you want, because
I'm just going to have a quick look at these yields, and I'll bang it over to you, mate.
Yeah.
So we have seen this little shift down. I mean, again, it's small. It's all small beans, these moves down at the moment. We're still floating up, have been higher than we were over after the NFP, but we're just down a bit below now, but we're not falling out of bed. And hence, this is pretty much the same picture you're seeing in dollar yen at the moment as well. UK yields, a bit more speed, obviously, because of it's been a bit faster going up than some of the others due to all that risk. It might be a bit faster coming down. Decent gap down in yields this morning, but can it continue? That's going to be the big question there. If it does continue, and again, as James and our chat room has been pointing out, this has been counterintuitive to what the pound has been doing, okay, because it's been mixed up with what US yields have been doing. So these yields going up has been a bit negative for the quid. So thus yields coming down here is going to be positive for the quid. But be careful if you're judging the pound. I wouldn't judge it by cable. I'd judge it by euro sterling at the moment. And it's still looking very, very weak. We're above the 84.20 zone and now holding it. Okay, so it's still looking weak for the pound here. We did hit my 84.60 level. I thought we might get a bit of traffic, 50s, 60s. We knocked that on the head pretty much to the pip before having this pullback. But this trend is still going for now. So be wary on that one. Right, mate, I'm going to punch it over to you then.
Mm-hmm. Yep. So the one which is interesting this morning is for the short termers at least. Look at this dollar yen. We have been since like end of December somewhere. Around the 20th of December. We're trying to form a little bit of a fresh channel here, and we tagged the bottom of it, which is just around 156.70, not really pips away from where we are now. That could mean that we may go a little bit below. Now I'm going to say like what's happening at 156. You see this low, prior little high here as well around 155.85, 90 on any weak print of the CPI. After what Ueda has been telling us after what we've seen in the rest of the dollars as well coming down a little bit. So this dollar yen may be in a bit of trouble for a visit down to 156. That's very possible. Now it's going to take a decent miss to take it below that level, but you never know, because as we were discussing before, I really doubt that Trump is going to slap tariffs on Japan anytime soon. Would it not be shooting one in the foot, especially for what's happening in the Asian area, right? So there is a possibility that even if we get a higher print or a sticky print, that we are going to, and we get like because the yen can be pretty volatile, and we get a move back up to 158, I would not be surprised if we find again sellers there, and on a sticky one, continue to trade this range or this bit of a channel. But on a weak one, this is now at a bit of risk of going to test the prior lows, I think, and the high here, at least there. Longer term, I still think there is no big change to the whole picture for as long as we're above 153, 153 and a half, 4. But on the short term, I'd be a little yeah, I'm not going to be the one catching a knife right here, right now, for now. I will see what to do after the CPI, perhaps. Coming back to what Ali was asking, Euro Swiss short. It's holding levels, Ali, we're holding already 93.80, and the one really where I said that we needed to be watching this is this trend line, which really held pretty well around 93.40-ish. For as long as that's holding, the short to medium term picture to me hasn't changed really much. Yes, no confidence in the euro, obviously, but do we have confidence in the Swiss? That's the other question. So I would say I'm really neutral on the Euro Swiss here. We are not breaking fresh highs, that's for sure. But I wouldn't. Yeah, for what we traded lately, I really have very little strong feeling. Just noticing that we held that trend line support, and then on oil, yeah, we're doing it again, but this trend line, the triangle is coming down, of course. So this supposedly break is going to happen from lower and lower levels. But it's interesting again that we are above 2680. I wouldn't get a sticky CPI. We're probably going to trade down to those levels again, but there too, I find the bids coming in relatively fast. And yeah, gold is still one that, despite whatever happens elsewhere, is still one that people want to hold a part of going into Trump. If he really would slap on tariffs, as I've already mentioned a good few times, this is probably going to be one that's going to rocket. That is still my opinion. But in the meantime, yeah, just watch what's happening around the levels, 2680, 26, call it 68.72-ish somewhere as a first support right now, if we are to see gradually higher lows. I don't have much else to look at either for now, Ryan. Euro dollar, I'm not sure whether we need to look at much. It's going to be around, where is it? 103 here, 35.50. If that goes, then we're probably going to move a bit higher, and then we are going to be talking about the big figures again. It's basically every 50 points on the euro dollar right now. It's somewhere, if you look at it technically, it's a relatively easy picture. Every 50 points, we're going to find yet another level, and the bigger one is probably going to be around 104.40, 40.50 if we ever get there. And with that, Ryan, back over to you, mate.
I wanted to,
Yeah.
I don't know if you want to just jump on gold again. One thing I've just popped up in my head this morning, it's China New Year 29th of January. I'm wondering if that's why we've seen this bidding gold kicking in since.
Yeah, I mean, it may have
year.
to do. Let me just have a quick look at the difference between physical and yeah, it's and the futures are a bit higher as well than spot. It may have to do with it, Ryan. It's not not a bad idea. It's could be a bit of a seasonal effect as well. But then I think whatever Trump decides next week is going to overpower whatever considerations
Yeah,
are.
I've been scratching my head since the early part of January. Well, since the beginning of the year, why gold's been on a bit of a grind, and that does smell now like a bit possible Chinese buying for New Year, because they do like to. I'm not one for seasonals, but things like that where they buy a lot of gold for the New Year, they give it away as presents and whatever, can have an impact in gold markets historically. There's Kay having a little look there.
Not a lot has happened start of 2024, into February. If I look back,
Yeah, I think it depends when it drops. But then
then it
we had
drops
that
a little
grind
bit.
up.
Then it drops a little bit during the New Year's period.
Yeah,
They probably
yeah,
have bought everything. Oh yeah, it's interesting. Obviously to watch it. I still think there's a fair bit of what if Trump really goes hard? And if it does, it's. I think the market just wants a part.
yeah,
What a piece of it, just in case. If you're long dollars elsewhere, it's not a bad hedge, and I think that's what is now happening as well in the books, is that get a bit of gold in there as just as a hedge.
yeah, exactly. Right. Well, thank you very much, mate. Good stuff as always. And thank you everyone for coming to the Flow Show. Don't forget to catch us on Face, where we'll be covering the CPI data live. So have a good day's trading, and we will see you all tomorrow as usual. Have a good one.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.